Hey guys, welcome to another Damilola Forex Academy video. Today I'm going to be taking you through a full course on chart structure. I'm going to be telling you what chart structures are and how you can be able to use the knowledge of chart structure to have better trade biases, better trade analysis, and use the knowledge in general to become a better trader. Okay, chart structure is a very important aspect of the charts, and it's important that you understand its movements. Okay guys, so grab a book, grab a pen, and make sure you take notes of every single thing I'm going to be taking in this video. Let's go guys. The first thing we're going to be talking about is what a chart structure is. Let's go ahead and write that down. What is a chart structure? A chart structure is the movement of prices. Okay, a chart structure is the skeletal movement of prices. Okay, because the prices moves in waves. This is the first thing you are taught when you learn Forex, that the market moves in waves, prices moves in waves. These wave movements of prices are chart structures because prices makes a push and therefore makes an exhaustion. Okay, prices makes a push and an exhaustion. These push and exhaustion movements are made up of the chart structure. Okay, so with the knowledge of the chart structure, you are very hands-on in the market. You know what is happening because you know you can be able to buy or sell at the end of an exhaustion, and you also know you can be able to buy or sell at the end of a push. It just depends on what structure you are looking out for or what structure you are trading. So it's important that we have the knowledge of chart structure. And like we said, chart structure is the movement of prices. Once you open your chart, everything you see is a chart structure, okay, because the market moves in waves. Okay, once you open your charts, you see wave movements. Okay, the market doesn't just keep going up or keep going down. Okay, after a push, you see a rest phase. A push, then there's a rest phase. That push and rest phase is made up of chart structures. Okay, so the next point is, what are chart structures? What are the types of chart structures? What are the types of chart structures? Okay, the types of chart structures we have are the bullish and the bearish chart structures. Okay, so let's go ahead and write that down. We have the bullish chart structure, and we also have the bearish chart structure. The bullish chart structure is made up of higher highs and higher lows, while the bearish chart structure is made up of lower highs and lower lows. Let's go ahead and specify that the bullish chart structure is made up of higher highs and higher lows, while the bearish chart structure is made up of lower highs and lower lows. Okay, now anytime we open our charts, the first thing that we should do is what? We should try to look at what structure price is on. Okay, that is the first thing I do to give me heads up on what prices is currently doing. Okay, if I open my chart and I see prices on a bullish chart structure, that is what I'm seeing, prices on higher highs and higher lows. This means that what price is on a bullish trend. And remember that what the trend is our friend. So if price is on a bullish trend, I'll be looking forward to buying. And if I open the chart and I see prices on lower highs and lower lows, that means that what price is on a bearish structure, which means price is trending downwards. And like we said, the trend is our friend. So if price is trending downwards, then I'll be looking forward to selling. Okay, there are instances, of course, whereby we trade against the structure of prices. We counter trend and trade against the structure or trade against the trend. Okay, but this should be done by professionals, because I myself trade counter trend and sometimes I trade against the overall structure. But anytime I pick a trade against the overall structure, I know that it's a very brief trade. Okay, I'm not going to spend a long time on that trade. It's just a very quick trade and I'm in, I'm out. Okay, but anytime I'm trading with the correct structure of prices, I can spend so much time in that trade because you know I'll just be riding the wave of prices, knowing fully well that I am in the overall structure of prices. Okay, if price is on a bullish chart structure, I'll be looking forward to buy, and if price is on a bearish chart structure, I'll be looking forward to sell. So, like we said, a bullish chart structure is a combination of higher highs and higher lows. Let's go ahead and show that out. Okay, this is it, higher highs and higher lows, and like we said, also push and exhaustion, higher highs and higher lows. Okay, so let's go ahead and write them down. Okay, so this is a low, right? This is the lowest point right here, and at this point, this is the lowest high right here. Okay, so this is a low, this is a high. Then at this point right here, this is an higher low. At this point, this is an higher high. This is an higher low at this point. This is an higher low because it's higher than the previous low, and this is an higher high because it's higher than the previous high. Okay, so this is an higher high, higher low, higher high, and higher low. Okay, so like we said, this is an higher high because it is higher than the previous high, and this is an higher low because it is higher than the previous low. Same thing right here, it's an higher high right here because it's higher than the previous. Okay, this is an higher high because it's higher than the previous high. This is an higher low because it's higher than this. This is still an higher low because it's higher than this. Okay, so this is a bullish chart structure. Let's write that out right here. This is a bullish chart structure. Like we said, it's a combination of higher highs and higher lows. Okay, so briefly, I'm going to be showing you guys a rough sketch of how we trade the bullish chart structure. Okay, so like we said, for a bullish chart structure, we'll be looking forward to buying at the end of an exhaustion. Let's write this out, higher low, and right here, higher low. So we're looking forward to buying at the end of an exhaustion. Okay, so remember that what this is a push, this is a push, and this is an exhaustion. So we'll be looking forward to buying at the end of an exhaustion. So we are going to buy, and we could buy at the end of the exhaustion. As soon as we see that the exhaustion is ending, we can be able to buy around here and probably take profits at the next swing high. Okay, probably we see a break of the high right here. A break of the high is a very good confirmation that, okay, price is done with the exhaustion and price about to make another swing high. So we can buy at the break of the high, then put our stop loss at the low and buy to the next swing high. Okay, we can also buy at the break of the high. After price makes another swing high, comes and makes another swing low, we can buy at the break of the high, put our stop loss at the low, buy to the next swing high. After price makes another swing low, we can be able to buy again at the break of the high, buy again, put our stop loss below and buy to the next swing high. So this is how we can be able to buy prices. Okay, for bullish structure, we buy at the end of an exhaustion. As soon as we see that what an exhaustion is done, what do? We enter our buy trade and we buy to the next swing high. Okay, so this is how we trade the bullish chart structure, and we trade the bullish chart structure with other tools, so that with other tools in our arsenal to get the pinpoint exit zones of prices. Bearish chart structure. For bearish chart structure, it's a combination of lower highs and lower lows. Okay, this is it. This will bearish chart structure is a combination of lower highs and lower lows. Okay, so this is an high right here. This is a low. At this point, this is a lower high because it is lower than the previous high. Lower low, and it continues like that. Lower low, continues lower low. At this point also, this is another lower low. But right here, this is lower high. It continues lower high and also lower high. Okay, so just like we highlighted, this is a lower high because it's lower than this. This is lower than this, that's why it's lower high. This is lower than this, that's why it's lower high. This is lower than this. Okay, this is also lower than this, and it keeps going like that. As soon as what we see the lower points, we know that what, okay, prices continue on a bearish structure of lower highs and lower lows. Okay, so how do we sell a bearish chart structure? We sell at the break of a support, okay, that is at the end of an exhaustion. As soon as what we see prices end the exhaustion, we sell here to another swing low, end the go make an exhaustion, and we see an end of the exhaustion, we sell again to the next swing low. Go make an exhaustion, we see the end of an exhaustion, sell to the next swing low. Okay, like I said, we use the chart structure with other tools like the Fibonacci to be able to let us know where an exhaustion is going to end. Okay, so let's clean all of this. Let's take this off and show how we are going to get entry points on a bearish structure. Okay, so for bearish structure at the end, remember that what this is a push on a bearish structure, this is an exhaustion. So at the end of the exhaustion, we sell. As soon as we see an end of the exhaustion, which can also be a break of support right here, we sell. We can put our stop loss above the previous high and right to the next swing low. Here also, after the next swing low, prices makes an exhaustion. As soon as we see prices end the exhaustion, we can sell again at the break of the support, put our stop loss at the high, sell to the next swing low. Same thing here again, after the exhaustion, we can sell again at the break of the support and what, put our stop loss at the high, sell to the next swing low, and also here break of support, stop loss at the high, and sell to the next swing low. So this is how we can be able to enjoy prices and what, ride the trend. If it's on a bullish chart structure or on a bearish chart structure, this is how we can be able to ride the trend and enjoy the flow of prices. Okay, on the other hand, we can also trade change of structures. Okay, change of structures. Okay, so prices can change from a bearish to a bullish chart structure, and price can also change from a bullish to a bearish chart structure. So let's start from a bullish structure that changed to a bearish structure. Okay, remember that what a bullish structure, push exhaustion of higher highs and higher lows, and push them. Instead of prices making another higher low, prices comes and makes a lower low. As soon as what we see prices makes this lower low, we know that what will sell at the break. Once prices makes a lower low, that is a low that's lower than the previous low, we'll sell at the break with our stop loss at the high and sell to the next support zone. Okay, we'll look for the next support zone that chart structure gives us as entry points, and we can take profit there. We can take profits here, we can also take profits at this support zone right here, depending on where chart structure gives us an entry. Okay, so just like we said, let's go ahead and show our entry, right out of the structure. Okay, this is a low, this is an high, this is an higher low, this is an higher high, this is another higher low, and this is an higher high. Okay, so prices change structure when prices came here and made a lower low. That is a low right now that is lower than the previous low. As soon as I see this, I know that what, price has changed structures. So what are we going to do? We are going to sell to the next. We are going to sell to the next support zone. Okay, we can sell right here, put our stop loss right here, and sell to this zone as the next support zone, or sell to this zone as the next support zone, or any other zone that our overall chart structure gives us. Okay, so this is how we can be able to trade charts, a change of structure from a bullish to a bearish side. Also, we can trade change of structures from the bearish to the bullish side. Let's go ahead and show that as an example. Okay, so that will be push, exhaustion, push, exhaustion, push. Then instead of prices making another exhaustion of lower highs and lower lows, remember this is lower highs and lower lows. Instead of prices making that, prices comes and makes an higher high. As soon as we see prices makes an higher high, price has violated the bearish structure. So what are we going to do? We are going to buy at the break of the higher high, the next candle that closest at the break of the higher high, put our stop loss below and buy to the next resistance and the next resistance, or any other resistances that prices gives us. Okay, so let's highlight this. Let's write out the structure. Let's write the structure out again to get a better perspective of that. Okay, this was where the structure changed, because this is what an high, this is a low, this is a lower high, this is a lower low. Then this point here where prices change structure is what? A lower high. This is a lower low. So instead of prices going and making another lower high and continuing its bearish structure, price decided to do what? Make an higher high. Okay, that is an high that is higher than the previous high, which indicates a change of structure. So we buy as soon as the candle closes to confirm a change of structure. We buy, and we put our stop loss at the previous low and buy to the next resistances, depending on where prices and our overall structures let us know that prices is going to get to. So this is how we trade a structure, and we trade what? A change of structure. So with the knowledge of structure, like I said, you can be able to have first-hand information on what prices are doing and where you can be able to buy or sell prices to and make entries and exits of a trade. So I'm going to be showing you a real chart example right now of the chart structure and how you can be able to use real life examples to pick trades. Okay. Looking at the chart right now, we can see prices on a bearish structure of lower highs and lower lows. And like I said, on a bearish structure, we'll be looking forward to sell, and on a bullish structure, we'll be looking forward to buy. So let's go ahead and pinpoint, identify this bearish structure of lower highs and lower lows out. Okay, so prices made a push from the peak right here to this point. Okay, that is the high, this is the low. Prices came to this point, made a lower high. This is an high that is lower than the previous high. At this point, prices made a low, that is a low that is lower than the previous low. At this point, prices made another lower high, an high lower than the previous, and at this point, prices made lower low. Yes, right at this point, this is the lower low here. The prices came up again. We can see the movement came up again to make a lower high right here, came down again to make a lower low. Came to this point, made a lower high, and came down again to make a lower. So clearly, prices is on a bearish structure right here of lower highs and lower lows. And remember what we said, we're looking forward to sell. Okay, so where is our sell entry point going to be? Okay, at the end of the exhaustion right here, remember, this is the push, this is the push, this is what the exhaustion, which is the rest phase. At the end of the rest phase, as soon as what we see a change of, as soon as we see that what, okay, the bears are coming back in to take prices down to continue with overall structure, what do? We sell, can sell at the break of the support, sell to the lowest point right here, and put our stop loss at the high. Okay, so we sell to the next swing low and put our stop loss at the high. What are the tools that are going to help us to know where price, the exact point where price is going to take profit? We can use our Fibonacci 161.8 zone, which is the Fibonacci extension zone. We can add it to our chart structure to know where to exit prices. So remember that what a chart structure is best traded when you have other tools in your arsenal. Okay, so if you want to learn how to trade chart structures, I'm going to be putting a link of the video in the description below, where I taught how to trade chart structures with how to trade the Fibonacci with the chart structures. Okay, so let's go ahead and continue. For our sell entry point, to continue the bearish chart structure, we'll sell what at the break right here, put our stop loss here, and sell to the next swing low right here. Okay, prices makes another exhaustion, and what we say, continuation of the sell. What do? We can sell right here and sell to the next swing low while putting our stop loss at the high. Prices comes back for another exhaustion. We can sell at the break of the support right here, put our stop loss and sell to the end. So this is how we can be able to trade a bearish structure, just riding the movement of prices or movement of prices on a bearish trend. So I can do this for 5 years, just riding. If prices keeps keeps moving on a bearish structure, I can ride prices for 5 years, just riding its bearish structure. Okay, as soon as I see the end of a bear of an exhaustion, I sell. End of an exhaustion, I sell. I can keep doing this forever. So but prices what moves in what bearish and bullish chart structure. So once prices change the structure, I'll buy again. Okay, but it's very, very simple and it's quite easy to, even if prices on a bullish or on a bearish chart structure. Okay, so this example right here, we're also going to see how prices change structure. Remember, prices had the peak right here, push, exhaustion, push. This was clearly a bearish structure, okay, of push and exhaustion, just like we identified. But now prices change structure at this point. Okay, instead of prices making its usual lower highs and lower lows, just as it has been doing clearly, prices decided to make what? An higher high. This is where prices change structure, okay? And what? Prices made an higher high, okay? That is an high that is higher than the previous high, okay? Let's see that, okay? So this is the highest point where prices got to here, okay? And we can see that what? This is the prices on this other hand went above that. Okay, prices went above that. So prices made another higher high at that point. So as soon as we see an higher high, as soon as we see candlestick close, what do? We buy, and what? We put our stop loss at the previous low. Okay, so this is the previous low clearly right here. This is the previous low. We buy at the break, and we'll put our stop loss at the previous low and buy prices to what? To various levels. Okay, so this is where, hold on, this is where the structure was changed. Okay, because prices created, like we said, prices created an higher high right here, and higher than the previous high. Okay, so that's where the chart structure changed. So we are going to be buying prices now to what? To several resistance zones. For example, we can take profit 1 here, we can take profit 2 here at the other resistance, and we can take profit 3 here at this resistance right here. Okay, so it's quite easy how we trade chart structures. And like I said, I can do this forever. I can do this for the next 10 years, just trading chart structures. Price on the bearish structure, I'll sell, and the price on the bullish structure, I'll buy. And anytime prices change structure, I'll buy, and I'll buy if it was a change of a bearish structure to a bullish structure, just like we've seen right here. And if it was a change of a bullish to a bearish, I will also sell. So it's quite easy, and I can do this forever. So this is how we trade chart structures. If you enjoyed this video, guys, do like, share, subscribe, and I'm going to be dropping more videos to make sure that everyone is profitable. Thank you, guys.